All right, today we're diving into something really interesting, Hungary's very unique, very careful journey into the whole world of cryptocurrency. It's this fascinating story where a deep-seated caution clashes with some seriously disruptive new tech. So, yeah, let's get right into it. And really, this is the core question, right? You've got this one massive force, Hungary's national currency, the forint, which, let's be honest, is known for being pretty unstable. But then, on the other side, you've got this population and a government that have been shaped by a history that just screams, be careful with your money. So what on earth happens when a wild card like crypto gets thrown into that mix? Well, this leads us to what you could almost call the Hungarian paradox. It's this incredible national balancing act, a constant push and pull between two really powerful, totally opposing forces. And these two things are shaping everything about how the country is dealing with digital assets. So here's that whole conflict in a nutshell. The push factor, that's the forint's instability. It's just naturally driving people to search for other options, alternatives. But then you have the pull, and that's this really deep-seated caution that comes from a long history of economic instability. It's what's making everyone, the public, the regulators, move really slowly. And it's why they're avoiding that kind of all-in, super fast crypto adoption we've seen in other places. Okay, so let's dig a little deeper into that push factor. Because to really get why some Hungarians are even looking at crypto in the first place, you've got to understand the very real challenges they face with their own national currency. And the key idea here, the big word, is a hedge. Now, all that means is it's a way to protect your money. Think of it like this. If your local currency is starting to lose value, a hedge is another asset you can buy into to kind of balance out those losses. And for a growing number of Hungarians, that's exactly what they see in crypto. And this comparison really gets right to the heart of it all. See, the Hungarian forint, just like any other government-issued currency, can be affected by national policy, by inflation. You know the drill. But then you look at something like Bitcoin, which has a mathematically fixed, totally capped supply. So if you're an investor who's worried about your currency just deflating, that limited supply suddenly looks like a really powerful shield against all that uncertainty. All right, so that covers the push. Now let's flip the coin and look at the other side of the equation. Because even though crypto has this obvious appeal, there are some pretty big reasons why Hungary isn't just diving in head first. These are those pull factors we talked about, the big cautionary obstacles that are really pumping the brakes. And these hurdles are, well, they're both legal and practical. For starters, you've got a real lack of clear, specific rules and protections for investors, and that, of course, is going to make people hesitate. Then, on top of all that, you have the practical side. Crypto mining is super tough there because of high energy prices at home, and, let's not forget, a lot of environmental pressure coming from the rest of the European Union. But here's the thing. People are getting creative. Innovation is happening. Instead of building these massive, power-guzzling mining farms, the market is actually adapting. The focus is shifting to smaller, much more sustainable operations that fit in with Europe's green goals. A lot of them are cleverly using surplus electricity that would have just gone to waste anyway. Pretty smart. And this brings us to what could be a massive turning point. There's a new regulatory framework coming from the EU. It's called MiCA, and it's right on the horizon. And the big deal here is that it promises to fix the single biggest reason for hesitation in the Hungarian market, that lack of clear rules. I mean, this really is the biggest gap right now, plain and simple. Without specific laws designed to protect crypto investors, people are just exposed. They're facing risks that were sorted out ages ago in traditional finance. If you want to build trust, you absolutely have to close this regulatory gap. And that's exactly what MiCA is designed to do. So how's it going to solve the problem? First, this Markets in Crypto Assets framework will standardize the rules across the entire EU, which gets rid of all that ambiguity. Second, it's going to bring in specific, really strong protections for consumers. And the idea is that putting those two things together will finally build the one thing that's been missing: real, widespread market confidence. So where does this leave us? What does all this actually mean for Hungary's crypto future? Well, it really points to a very calculated, very measured path forward. It's one that's all about carefully weighing every single risk against every potential opportunity. And this is where you can see that whole balancing act in perfect focus. For every risk, like regulatory uncertainty or those operational constraints, there's a pretty significant opportunity on the other side. The very currency volatility that creates risk is the same thing that creates the need for a hedge. The constraints on mining, well, those are actually pushing people towards sustainable innovation, and the whole market is just waiting, really, poised for a massive transformation as soon as MiCA comes into play.
And this really is the key takeaway here. In the crypto world, which is just moving at lightning speed, being slow and deliberate, it might not be a weakness at all. Actually, by putting security and legal clarity first ahead of all the speculative hype, Hungary's measured approach could end up building a much stronger, more resilient crypto ecosystem for the long haul.
So, I'll leave you with this final thought. In this global crypto race that's so often about moving fast and taking big risks, could Hungary's defining trait, its caution, actually turn out to be its greatest strength, its biggest competitive advantage? It's a really fascinating question to think about for the future of finance. Thanks for tuning in.